We are here for our fourth episode of Money Talk Mondays. Really excited to talk about this topic, which is dividend stocks, and as a part of that, REITs are what's called real estate investment trusts. We are going to kind of kickstart things here today. So, I want to start off talking about dividend stocks. I think most people understand the idea of investing in stocks, but I am going to just talk about it just in case you're really new to investing. And this is not investment advice, this is not money advice. This is, us having a conversation about dividend stocks, something that I really like to invest in, and also real estate investment trust. So, a stock is really, if you're going to purchase a stock, you're really buying a representation of ownership with a company. So let's say I wanted to buy one share of Facebook. Well, I am actually purchasing a percentage of that ownership, or a representation of a percentage of ownership. So technically, you are a percentage owner of Facebook when you purchase one share of Facebook stock. So that's the idea behind it. People invest in stocks for different reasons. A really popular reason would be to actually purchase a stock for maybe $10, and then you sell it a year later for $100. And so you've made a really nice return on your investment, right? So that's the number one reason. So let me just put up here in the comment, stock. So I'm going to type growth stocks versus dividend stocks. So I think it'll be good to start there. So with a growth stock, that's really the intention. So the intention is that you're going to actually see some growth with the company. And because of that growth and profits, you are going to get a really high return on your investment when you sell that stock, or within your net worth, your value of holding that stock. So a big example of this was Tesla stock. So a lot of people, if you were an early investor in Tesla, you got in at a low price, and then some people sold when the value of Tesla got to be about 700 or so per stock, right? That would be the example of a growth stock versus a dividend stock. With a dividend stock, I'll talk about the good, the bad, and the ugly. When it comes to dividend stocks and investing in them, I do invest in certain companies that pay out dividends, and we're going to get into that. So with dividend stocks and dividend companies, so these are going to be companies that actually provide a reward for you investing in the company, and this is called a dividend. With growth companies, like a Facebook, like a Snapchat, I did invest in Snapchat. The difference with me investing in Snapchat, I bought in at like $16, right? And now the price, the last time I looked, is $70 per share. So I'm getting the growth potential from that company. Typically, you're going to be looking at startup companies. They have a lot of growth potential, right? So people aren't investing because those companies are providing a payout. They're not stable enough on average to actually get their board of directors to say, yeah, we want to pay dividends, or get their owners to say, yes, we're going to go public, and as a part of that, we're going to pay dividends. No, that's not really the goal. They already have enough people wanting to invest in these type of companies because they see that growth potential. And again, the growth is, okay, I'm going to buy this stock for $16, for example, when I bought Snapchat. And now that it's at $70 per share, I can sell it and I can get some gains on that investment, right? Snapchat does not provide dividends, and that's why they don't need to. When it comes to the dividend, again, this is your reward for investing with a company. A big reason some companies will invest in dividend, and hello, Shay's World, welcome in. A big reason why companies will determine that they need to issue dividends, right? Rewards for investing in the company, is because they don't have a ton of growth potential. Folks are not beating down the door just to invest in, say, a company like Emerson. It's a stable company, it's old, it's not having tons of growth, tons of gains. What's really a big reason why someone would invest? Well, you can actually earn dividends. So we're going to talk about dividends. There are two types of dividends. I don't think a lot of people know this, but there's the kind of common dividends that a lot of people talk about, which are cash dividends. So this is something where you are regularly getting a payout from a company. The other thing is a one-time dividend. So this is just a one-time payout. So we'll talk about the cash dividend and then we'll talk about the one-time payout. So the cash dividend. This is something where you're actually, in order to retain shareholders, the company will pay out on a monthly, quarterly, these are the more common ones, monthly or quarterly basis. Sometimes it's twice a year, sometimes it's annually. So a good example of monthly would be Realty Income. This is a REIT, and I'm going to get into REITs shortly, but this is a real estate investment trust that pays me a dividend every single month. So that's an example of a monthly dividend paying stock, Realty Income Group. And actually, that was a newer REIT that I joined because when stock prices went down really low, I saw that Realty Income stock went low. It was normally at about $60 per share. I think it got in right around like in the 40s or something, 40 something dollars per share. And I'm really glad I did because their stock has increased a bit, but not as heavily as, say, for example, a Snapchat, which I bought in like 2017 at $16 per share. And then now today is $70 per share. So it's, again, that growth potential with growth stocks versus these dividend stocks. So not a ton of growth happening with Realty Income, but the advantage is they're paying a dividend every single month. The next one is, and hello, Frugal Mama boys. The next one is, a quarterly stock, which a big one for me has been AT&T. They pay quarterly. So every 4 months, like clockwork, they're paying a dividend. So that's, cash dividend stocks, right? Annual dividend paying companies are like Emerson and Aflac, those type of long-standing companies. Not super exciting industries, right? But they pay those dividends every year. So a one-time distribution is where it's like a one-time thing. It's the board of directors of a company getting together and saying, hey, we are going to approve a one-time payment of either additional stock or cash dividends. So it's more of a one-time thing. Sometimes there's even property involved. So that's that right there. I'm going to take a pause for just a second. Okay. And thanks for joining Frugal Moment Boys in Shay's World. Appreciate you stopping in. Okay, so how does this work? How does the whole dividend stock work? And I had to make some notes because I was like going through my portfolio. I use a couple of investment sites. So I'm actually using Fidelity. I use TD Ameritrade, which used to be Scottrade. And I use M1 Finance, which is really cool because you can buy fractional shares of companies to really diversify your investments while still earning dividend stocks, or dividend payments. So for example, if let's say a company has a 50-cent per share dividend. So let's say you just bought one share. Let's say this is Twitter. So let's say Twitter. And we wouldn't say Twitter is a growth company because they've seen a lot of significant growth, right? In the early, 2000, 2011, 2012, 2013, right? So let's say you have 50 cents per share. So you buy one share. So you're going to get 50 cents whenever they pay out that dividend. Let's say it's a monthly basis, right? Now, hey, Sharky, welcome in. Now, if you were to get, 5 shares, you would get $2.50 for your investment. So that's really the thinking behind the dividend stocks, and that's what makes it so powerful. The more stocks you own, the more dividends you're going to get back. And so if you think about it long term, you're not really doing anything but putting your money into a stock, right? You're literally just putting your money, letting it sit there. It's almost synonymous with a bank because the banks are investing your money that you're putting in. But instead of you giving it to the bank and getting like what's the interest rate right now, Sharky? I'm asking you because I know you're the financial guru in here. What 0.0% or 0.01% or something, or 0.05% if you're lucky. That's not great, right? How much money are you getting? And normally those are annual interest rates, not getting much of your money. However, when you put your money into one of these companies, and I mentioned I'm going to talk about the good, the bad, and ugly. So the bad is that it's not growing a ton. These companies are not growing. Like AT&T, Emerson, Aflac, these are not companies where you're like, yeah, I'm going to get a 27% gain on my investment. No, you're going to see slow and steady. You see traction upward, you see traction downward. Nothing too exciting with these companies. The thing that people like is that they're putting their money there, just like they could put their money into a bank account, let it sit there, and it earns them dividends. So this is a cash flow. So that's another point for the good, right? So the good is you don't have to do much. It can literally be passive income. The most that I do with dividend paying companies and my stocks within these companies is that I review them. Because getting to the bad, not only is there not a lot of growth potential with these companies, however, you will see that companies can change. Let's say the board of directors decides, nope, we can't do the dividend. Something happened, financials aren't looking great, we cannot do a dividend, we can't pay it out. Well, what do people typically do when that happens? People shift their funds elsewhere to a company that is paying dividends. If you are a dividend investor, you're not going to just keep your money into a company when they say, nope, we can't pay out dividends this year. We can't pay out dividends this month. We can't pay out dividends this quarter. What am I going to do if I hold Realty Income? I'm going to say, well, let me look for another good company that I can put my money in so I can continue getting my cash flow. So that can make the stock price go down. And not only that, you're not getting your dividend, right? So that's something that you should look out for. You should look at the consistency of how often does a company pay out their dividends. Reason why I like Realty Income and AT&T, and I also like a REIT that I'll mention, is that they have been consistent in their dividend payouts, right? Which I really like. But there's always that chance that they can say, nope, we can't do it. You're at the will of that company and the board of directors and that leadership in place. So something else you want to consider too is not only can the company decide, no, we're not paying dividends. Most likely they're not going to do that because they want to keep their investors. You may see them shift the dividend yield. So maybe they were paying 5%. And they lowered it to 4%, right? So that means less dividend money coming your way. You're still getting a dividend, but they lowered the amount. So that's another bad thing that can happen with dividend stocks. So let's say, looking at the dividend yield. So let's see. So it's a percentage of that stock price, right? So if you get 25 cents per quarter, so thinking about maybe an AT&T, stock price is maybe $10 per share. So you'd have a dividend yield of 10%. But what happens when that decreases, right? Again, that's the bad part of dividend investing, is that these dividend yields can shift. But for the most part, most of these large companies are going to continue paying a dividend because that's the way that they can bring in investors, right? Again, most people are looking for, most traders are getting to the growth stocks, right? Or most investors are trying to get really big gains. They're going to the growth stocks, right? With these multinational, really large, really stable companies, a good thing is you don't think they're going to go anywhere, right? They're not going to just up and be gone. That's kind of a struggle with the growth stocks, because a lot of times these are startups. For example, I invested in a company called Dropbox, and unlike Snapchat, like I was in 2017, I was like, yeah, this is it. Like I was young, I was using Snapchat, I was like, whatever. I'm putting my money here because I think it's going to be here for a minute. It reminds me of Facebook. It reminds me of Twitter. Like, this is cool. $16. And so now it's at $70, and I'm thinking back and I'm like, yeah, that was a great decision. With Dropbox, I was kind of like, oh, I don't know if it's going to be here in a year or so, but I'm going to put my money in anyway and see what happens. Luckily for me, it did garner some nice gains, and the company is doing very well, especially with HelloSign. So that's an interesting company to, follow if you're interested in stocks. So anyway, all that to say, there are some considerations you do need to make when you're thinking about whether you should invest in dividend stocks versus growth stocks. Again, you're not going to see high gains when it comes to dividend stocks. You're not going to see, it's not going to be super exciting. You're not going to see as much volatility in the stock price. And the positive for companies that pay dividends is they're typically long-standing. Again, Aflac, Emerson, AT&T, these are companies that have been around for years. They're not just going to up and fly away on you, right? The other thing with them is that typically they are consistent with paying you dividend payouts. And so that's what you want. The reason people go to dividend stocks is for those passive payouts. You don't have to do anything. You just have this cash flow that comes to you just as you are going to put your money most likely in a bank. You can put it and shift it into a stock or a couple of stocks or a group of stocks that do pay out dividends. This is why I like M1 Finance. And I think I might have a link below for M1 Finance. If not, reach out to me on Instagram and I will send you a link so you can get started with them. If you're interested, these are my details right here. But M1 Finance is a great app where you can actually buy fractions of shares within different companies and still get those dividends. So let's say with Realty Income, which again, I'm going to shift to REITs in a second, you can't afford $60 per share or $65 per share, wherever it's at right now. It's just too much for you right now, right? Well, you could actually buy fractions. Or let's say a company like, I'm trying to think, Alphabet or Amazon, right? You can't just put in $1,000, $2,000, $3,000 per share, right? So you can buy a fraction of a share and you still get those dividend returns. That's why people like it, because they can buy fractions and they can better diversify their portfolio. All right, let me pause here for a second. I see a comment from Sharky. The current U.S. prime interest rate is 3.25%, but it's much lower than that for money market funds, which is 0.07%. Oh gosh. And just a little bit higher for CDs. That is just sad. That's so sad. For folks that are in this chat, definitely check out my video where I talked about cryptocurrencies. I'm going to do a part 2 of that, because with cryptocurrencies, you can also get interest back from investing in the crypto coins, stable coins. And of course, there's different high gains for that. So let me get back to talking about dividends. So that's pretty much the coverage I wanted to talk about. We talked about what is a stock. We talked about what makes dividend paying companies different. What is a dividend? All of that. Now let's talk about one other downside to dividends, and I'm going to move into the REITs. So another downside to dividends, which, I mean, just with investing, you're going to pay taxes. You're just going to pay taxes. The other thing is that with dividends paying stocks or dividend paying companies, they are not obligated legally to actually pay out a dividend. So again, the board of directors says we're not paying dividends this year. They're not paying dividends this year, and there's nothing you can do about it. Even though you put your money in there, let's say you put $1 million into Apple, hey, they say they're not doing it, they're not doing it. or they say they're lowering the dividend payout, they're lowering the payout. Okay, so the good, again, stable cash flow, stable companies typically, large, long-standing companies. They're normally not going to go down in price very much, but they're also not going to go up in price very much. So some can, especially if you buy during a crash, you'll see an increase. Like if you bought in 2020, you may see an increase, but otherwise you may not see too much of a gain. And that's not why a person would typically invest in a dividend paying company. All right, so I'm moving on to my REITs, and I do have some notes here. Oops, I shifted the camera just a little bit. Okay. Hopefully you all can still hear me okay. Hello, Apostle. Welcome in. Nice to see you. And thank you, Sharky, so much for providing that for me. I think you're my one moderator in here tonight, so I appreciate you being here. Hello, Apostle. Hello, Teacher Downer. Hello, welcome. Okay, so let's move over to the real estate investment trust, because there's a couple reasons why I love REITs. And the main thing is because I talked about the downside of dividend stocks, right? They don't have to pay you anything. Well, real estate investment trust, they have to pay you. They have to. If you own and they make a profit, they have to pay you, right? So we're going to get into that. So what is a real estate investment trust? So these are going to be organizations that own or finance income producing real estate across different sectors. So you could think of, so some that I'm in. So I'm in Realty Income, which is more just general real estate market. Like if you think of someone buying a house, etc. Then there's KRG, which is Kite Realty, and they actually do real estate for, large stores like a Walmart, a Target. You can actually go to their site and see what type of properties they have. And so all these different malls where you see a Ulta Beauty or Target or Costco, they own that, because a lot of these businesses, they're not owning the land that they're actually operating on, they're leasing. So these are the companies that actually own. They're like the landlord, right, of the corporate space. So they are actually letting these companies rent space, and they're paying back to the REITs. So those are two that just come top of mind. I also do like, what is it called? The Kimco, I think it's called. So another one I'm invested in. I really like them because they're similar to Kite Realty. They're invested in more of like the stores, the Walmarts, Targets. And I actually invested more heavily in them last year because their stock prices went down. I started investing, I think 2018 with them, and their stock prices had went down. And so I said, hey, 2020, realistically, are people going to stop going to Walmart? Like me thinking about my mom and how often she would go to Walmart and how much she loved Walmart. I said to myself, there's no way people are going to forever stop going to Walmart, stop going to Target, stop going to Costco. And they own that land that those places are operating on. So I said, you know what? Price it went down to, I think, about $8 to $9, $10, $11. I bought in more heavily last year and I did reap some gains, but typically, same with the dividend stocks overall, you're not going to see a ton of gains when you're investing in real estate investment trusts. That's not really the plan that a person will have when they are investing in this type of, this type of investment, which is basically a dividend stock in my opinion. But the difference is they have to legally pay you at least 90% of their taxable income, right? So unlike Apple, which is just a common, you buy common stock within this company, they decide, nope, we're not paying dividends. That's fine. They can do it. With a real estate investment trust, the great thing about them is if you're invested in them, if you own a single share of their stock, right? And you can buy them on the platforms that I mentioned, M1 Finance, TD Ameritrade, Fidelity, any of the major, stockbrokers out there. you can purchase their stock, and they will have to legally, if they've made any profits, they have to pay that back to you. They have to pay at least 90%. So typically their payouts are higher than your average dividend stock, because here's the thing with dividend stocks too. You want to pick long-standing companies. There are some companies that are a little sketchy when it comes to dividend stocks. Those are the ones that are saying, oh, we're going to pay, I don't know, 15%, right? And it raises an eyebrow, because generally most companies are paying anywhere from like a 1% to maybe 12%. When you get above that, it may be a little risky. You got to look up the company details. I tend to stick with long-standing companies because I know they're not going to, again, poof, go away like a startup can, right? So when you're thinking about a real estate investment trust, that's a really big reason to get involved, because they legally have to pay out their profits. The other reason is, I want to mention Warren Buffett he actually doesn't really buy a lot of real estate, like natural real estate. He does, however, there are two REITs that he invests in. This is a way that you can invest in the real estate market and take advantage of it without buying a physical property. So if you're like someone like me, that was another reason I thought about real estate investment trusts, was because I didn't, one, feasibly, like a few years ago, I definitely would not have been able to afford a home. And I wasn't even sure where I was going to live. I was like, oh, I want to go to New York. Why would I buy a home now? And one of my friends actually purchased a home. I'm like, I don't think I'm staying in St. Louis, Missouri. So it allows you that opportunity to actually invest in the real estate market and enjoy some of the gains, right? Because you can get some gains with these real estate investment trusts. I have, if I wasn't recording from my phone, I would look into one of my brokerage accounts, but I have some significant gains with Realty Income, KRG, which is Kite Realty, and also Kimco Realty. Because what happened? A few months after, like, everything kind of went crashing down last year, things started to go back to normal. People were buying out the stores. People were, these companies were able to pay their rents. So what happened? The prices went back up and actually went beyond what I had initially bought into, like in 2018. So you can get some gains, especially if you do with my process, buying low. I don't really sell too often, but sometimes I do sell off some companies. Like, for example, I sold off Pfizer last year just because I was like, I'm not super involved in pharmaceuticals. I don't really understand the pharmaceutical world so much. And so I got my gains and I was out. Let me see who came in here. It's also good to look for companies that are consistently raising the dividend in their stock. Yes, I agree, Sharky. That shows accelerating profit growth in the company's near and long-term faith in the growth. I love that. Thank you. Yes, for sure. That's a great sign. So one would be making sure they pay consistently their dividend. They're not like saying every year, oh, we're not paying the dividend this year, right? But they're also consistently raising their dividend payouts. Love that. And there's also some growth. Like you can definitely invest in dividend growth companies for sure. One dividend growth paying company I got into was, what is the name of this company? It's like it's one of those storage companies. I can't place the name of it, but it does pay dividends, and it's newer. Like there's a lot of growth in that space. I wish I had the name of it, but I don't, unfortunately. I also invested into the company that owns Match and Bumble, and they're also growing. So there's some growth in that, and they do pay dividends. They're international, so just watch out for certain things like international companies, because there are fees tied to that when you do get your dividend. And so there's a lot to kind of consider within that too. One bad thing with the REITs, right, is that they can lose value. Just like they can go up in value, they can also go down in value. Typically, they're going down in value actually when interest rates go up. So that's another part of why I think I saw the growth with the real estate investment trust in particular. The interest rates have stayed very low. So their prices are continuing to go up, right? If you think about real estate market, right? So when the interest rates are low, you're going to see gains. And then when interest rates go up, you might see some losses. So just keep that in mind when you're looking to invest in real estate investment trust. Something else I want to point out is that with real estate investment trust, you can also invest in things like hospitals. There are some real estate investment trusts. Again, think about organizations, companies, they all need spaces to be, and they're typically not buying, they are leasing spaces. So you can invest in REITs that focus on, healthcare spaces. You can invest in REITs that focus on more housing. You can invest in real estate or real estate investment trusts or REITs that invest more in these different store locations, these malls. Like I was mentioning about what I did last year, and I was like, oh, well, the reason I invested in KRG and, Kimco was I was like, well, I go to the mall. I mean, I go to these malls a lot. And you can actually see when you go to their websites what places they're in. You can look at the places. You can even, if you're in a location, you can drive to one of their locations and see if it's in a thriving area, people going into the stores. You can actually see these locations. So even restaurants, right? So restaurants are releasing spaces. There's so much opportunity with real estate investment trust. And again, they have to pay out at least 90% of their profits. So that's like the biggest benefit there. You get to be in a real estate space and you get to kind of explore that and get some gains from it and also get dividends back. So this is why I love dividends, because you can literally create a cash flow. Now, it does take time. This is the downside. It takes time. Look, I'm telling you, with some companies, it can take a while. With Snapchat, that was a growth company, bought in $16 and it got to $70 per share. However, it took a while, 2017 to 2021, right? Dropbox, I'm still looking for more gains with that company, right? There's another company I invested in, what is it called? See, it's hard when I don't have my portfolio right in front of me because there's so many that I am actually invested in. Oh, what is the name of it? Oh well, I can't think of it. I'll talk about it in another one. But I see some Chinese characters in the in the chat, or Japanese characters. I don't know, but I don't speak Japanese. I love Japanese cuisine, but I don't speak Japanese. I can't even think of one word, unfortunately. It's pretty sad because I love to travel to Japan. But that's pretty much my overview. I did want to mention two REITs that Warren Buffett himself invests in. The first one was Heritage Growth Properties. I'm going to put this one in the chat. I didn't realize there was an echo. I'm sorry, guys. Heritage Growth Properties is one. The other one is Store Capital. So those that I just put in the chat, those are two. Again, Warren Buffett doesn't typically invest in real estate. He's not a real estate investor. He knows stocks, right? But these are two that he actually invests in himself. If you're someone that's like a Warren Buffett fan and you follow his moves, well, those might be some to consider. There are two that I'm going to be considering as well. Valid information being shared. Thank you. You're welcome, teacher. Appreciate you coming in here. A better tomorrow. Hello, how are you? Welcome in. You shared. Thank you for sharing it out. I would love to have more people understand the power of real estate investment trust, the power of dividends, even to just understand. I think more people kind of understand dividends at its base, but I hope this was a good overview of what a dividend stock is, what a real estate investment trust is. I wanted to start with dividends first, just because you kind of need that baseline to understand, okay, then what do real estate investment trusts do? They're basically a form of getting dividend payouts, but in a more assured way, because these are companies that legally have to pay you out a dividend if they have if they are profitable versus if, other companies that don't have to. Again, Apple, Facebook. Those are two companies I'm invested in. And they do pay dividends. I love that. We love you. We love you, Facebook and Apple. But they don't have to. So I always have that in the back of my mind. All right. Now, I will say too, with dividends, they try to always pay dividends. This is why you hear on the news all these things happening with these companies and getting bailouts and stuff, because they have to pay their investors. They are going to do everything they can to pay their investors, right? Because they want to have access to that capital. So even if, looking at the employees, not going to say every company does completely right by their employees, unfortunately, but they're typically playing right with their investors. They're making sure, if they can any way in their power, they are paying out those dividends because they want to keep that money for their use. Same with, similar to like how banks were years ago. They wanted to keep people, investing in the banks. Now they don't have to, right? We know who bails out the banks. Denise, hello, welcome, Denise. I'm about to try to buy some stocks now. I think it's a good passive income. It is one of my favorites right now. Again, this is not investment advice. However, I really enjoy AT&T. They pay me quarterly like clockwork, and I like Realty Income. Like Realty Income, it's monthly. Again, you can have dividend paying stocks that pay monthly, and those are like my favorites. That's like the goal, to have a company paying you monthly that covers some of your bills or all of your bills. Passive income that you can create. A note though is that you should be diversifying your portfolio. Shouldn't be just relying on one company, because again, to my point earlier, things can change. The other thing is you want to make sure that you're monitoring your investments. You're making shifts where you need to, right? You have a plan for your portfolio. If you want to invest more heavily in growth dividends, or you're identifying those companies with that potential to grow. And to Sharky's point earlier, they're showing a trend of increasing their dividend payouts versus a company like Emerson that, they pay annually. It's not a really high dividend payout, but they are paying it out, right? So you may want to make those adjustments, deciding, do you want to focus on monthly, quarterly, annually? What does it look like for you? What's the best option? I would say kind of diversify it, and also get a really good understanding of what's going on with that company. Are they growing? Or are they just one of those long-standing companies that you think is forever going to be here? Like they're just always going to be here, like a Coca-Cola, for example. People are going to keep buying Coca-Cola products. That's what I think. So if I thought that, I would go, yep, I'm putting my money in. Financials look right. The leadership looks right. Let's do it. All righty, moving on. Let's see what Sharky has to say in here. So, right, REITs have a pass-through structure that legally obligates them to pay the majority of their profits to their investors as dividends. Thank you for backing me up there, Sharky. Sharky is the finance guru, spent many years in finance, so I appreciate that. King Akil says, I'm driving, so I can't text. Well, I'm hoping that you are enjoying the conversation. Shout out to my member, King Akil. Appreciate you being here. I don't know what this means. I hope you are saying some really good things for us, but, this is YouTube, so who knows? Oh, konnichiwa. I actually do know that word. Hello. That's the one word I know. Other than, I guess, sushi will be Japanese, right? But konnichiwa, welcome to the channel. And yes, no, I don't, unfortunately. One day, maybe I'll get there if I get to travel to Japan. Let's see. Sharky saying English, please. I know, I do not speak Japanese. Nice leads. You're welcome, Apostle. I definitely hope they are helpful. Again, this is not financial advice. This is just me sharing my perspective, what has been helpful for me, and what provides not a huge cash flow, but a cash flow that I can look forward to. Now, what I do with my dividend the dividend payouts and the dividend payouts I get from my REITs is I actually I used to have it set up for auto invest right back so I can get more shares. So some I have that function. I think the only one that I don't have the function with is AT&T, just because with them I prefer to buy into AT&T when that stock price goes lower. So when I started buying in AT&T years ago, I think price was right around $40, $38. And then it's actually gone down. The lowest I've seen it has been about $26. So I buy in closer to 26, 27. Anytime it's below 30, because it kind of fluctuates a bit, but it generally fluctuates between 25 and about $35 overall. So I know where to buy it. And again, my goal is not huge gains with AT&T. All I really care about with them is just run me this money. That's what it's about. It's about giving these dividends because long term, I want them to be a part of my portfolio. I'm also a customer of AT&T. So in my mind, I think I've talked about this in another video. When I think about investing, I think about from a company perspective, I'm using this product. This company owns this product. I'm investing into them anyway because I'm buying it, right? I'm a customer. I'm already investing. Why shouldn't I own a piece of this company that I am putting my money into? So that's another reason to invest in dividend stocks, especially think about it, a lot of the products that you're using on a day-to-day basis, your toilet paper, your food products, right? There's one company that I invested in, which is all food, which was Newell Brands, I think. It's like a P&G company, right? So all these different products that you have, food products, nail care products, all these different things you can invest into and they give a dividend. One company was Coty. Coty owns Balenciaga and OPI and all these different products, and some of them that I used. And I was like, hey, they pay out a dividend. Why wouldn't I invest into this company, especially when they're at a low? So I do use a strategy where I buy at the low. I create watch lists. When you open a brokerage account, you can create watch lists for yourself so you can keep track of what's going on with certain companies that you're interested in. When you hear the news that, oh my gosh, everything's burning, everything's on fire, there's blood on Wall Street, there's crashing and burning, like that's a good time that you might want to buy in. It's really scary and mentally it's really difficult for people to do that. However, now for me, I don't really care. I've seen the ups and downs with the market. Same with crypto, which I've talked about in last week's session. But yeah, because what goes up must come down, what goes down must come back up, right? It's gonna ebb and flow. You're not just gonna stay down, right? Now, some companies will be obliterated, but we're not investing in those kind of sketchy companies, right? It can be really high reward, but very risky. With dividend stocks, it's less about the high reward. It's more about stability, paying the dividends consistently, and being a long-term investor, because unless you have millions just to put into a stock at one time, it is going to take time for you to build a portfolio. Again, for me, I started investing in 2017 when I was like not too far out of school, and I was just, I had been investing in my 401k, and I was looking for a way outside of my 401k to earn some income and start really investing beyond that, because we'll talk about the 401k, the good, the bad, and the ugly on that. But one disadvantage is you have really high taxes when you take out your 401k before you're quote unquote eligible, right? To your 50s and 60s, right? So that's the downside of that. I wanted to have something that I could actually invest in and dig into if I wanted to before I got into my 50s and 60s. So let me move on to Apostle. Let's see. Yes, Apostle, always best to do your own homework for sure. Do you do things on your own, or do you have a financial planner? So I have actually had multiple conversations with financial planners, and every time I've talked to them, I just don't see the advantage, because they are getting a percentage of your income. I just don't see the benefit. So I don't use financial planners personally. But for other people, especially if you have a really, really high network of just properties and so much stock and so much this and so much that, I think it would be smart to use a financial planner. But for someone like me that doesn't have multiple properties all over the place and so much stock and so much this, and it just wouldn't make sense. Or a business, like it's like a really high yielding business rather. For me, it just doesn't make sense to be giving a percentage of my money to someone to financially plan when I already have my plan. There's too much information online for me to have a planner. The other reason for that is there's also robo advisors that you can use now too. So in One Finance, for example, they have that option where you can reshuffle your portfolio around if you need to, and they actually help you with that. So no, I don't I don't invest in financial planners. But it's not to say that's a bad idea for someone. Just for me personally, I just don't yet see the advantages. I don't disagree with meeting with a financial planner. Most financial planners will meet with people complimentary, just to kind of learn about their products, to learn about what the advantages are of having a financial planner. I met with a financial planner, actually two while I was in New York. I met with one while I was in St. Louis. I have yet to meet one while I've been here in Texas, but I probably will at some point. And if I see some advantages, I would, but currently I don't. You seem to understand the market, so it makes sense. Well, I've been in the market. So, I won't say I'm an expert. And no, I did not study finance in school. I did study business. So I did take accounting, finance courses in school. When I got my business administration degree, that was a part of the program. But unfortunately, with your college, with college studies, you do study some stock market, but it's not like heavily. It's not like you're doing technical analysis, not like you're studying that. But there's a lot of courses you can take online for free for this type of information too. But at a base, really, my learning has come from reading, watching other people in the market, and then finally I just jumped right in 2017. And that was probably the best way for me to learn the markets, to get used to the up and down kind of movements with the stock market. And then even with cryptocurrency, I I learned a lot, but it wasn't until I had some, skin in the game, I actually put money in, that I felt more comfortable. So that's why I can say, look, and this is what companies do, these investment firms, they will invest as companies are going down and they get higher gains because of it. And that's how I do. I see the company crashing and I get a little I get a little excited. I'm like, what? This company I have on my watch list is crashing? Oh, it's time. It is time. And then once it's going back up, I decide whether I want to stay long term or if I want to take profits. So one company last year that I did take profits from was Pfizer. Again, only because with pharmaceuticals, I have just not been super knowledgeable about that space. It's not something that I'm super interested in being a part of. So I just took my gains and I went on and I invested in something else that I wanted to hold long term. Pfizer is another company that does pay dividend payouts as well. They do offer dividends. Let's see. Apostle says, I'm still not sure about crypto. Crypto is extremely volatile. So when I first started talking about crypto on this channel, the price of Bitcoin was about, I think, 30,000. It had went up, it went down. So it had gone back down to 30 or 31,000. And I had been kind of making these little teaser videos on TikTok just for fun, right? And I was like, I'll bring it to YouTube and I'll kind of introduce crypto to folks here. And the price now is right around 49,000. Last night, it was at about 50,000. It's a very volatile market. However, and I talked about this, you'll have to check out my prior episode where I did more of a discussion on cryptocurrencies. The reason I invested in crypto was because it's a space that you kind of know, you can see it, you can see the shift happening. You can understand, just like years ago, we understood streaming. Like streaming was a big thing. It was completely new, right? You kind of knew Netflix, Hulu, they were going to succeed because you saw the shift with streaming. Lots of us were streaming. We were like, forget cable. I just want to stream these, stream this stuff on Netflix and watch it for like 10 hours, right? We felt that shift. We saw that shift. And those that paid attention to it invested into companies like Netflix, right? We saw the shift with social media, right? We could see that shift happening. With the crypto markets, we can see this idea of crypto and digital money and blockchain, right? So these blocks of data and it, these ledgers that are in an open source type of place, decentralized. This is what people are wanting. This is what people are moving to, right? You can see the shift happening. So I did not want to be in a place last year when I had been thinking about it and learning about it and listening about it. And a good friend of mine who's based in New York, he told me like, hey, you should invest in Bitcoin. And I had been looking at Ethereum, which is another cryptocurrency, for a while. I've been looking at Ethereum. I was like, oh, and at the time it was like $300. And I was like, oh, I shouldn't do it. I might as well, like, why not? And I was back in Dallas. This was last year, right before the fall. And I was like, I've been thinking about it. He's telling me to do it. He does have a finance degree. And I was like, let's do it. Let's get into Bitcoin. Let's get into Ethereum. And then let's even check out some of these other coins if these go well, right? I saw gains. Last year, Bitcoin was like around 10,000 starting price, and it just kept going up. Ethereum was around, 600, and it kept going up. And so, yes, I could have bought in a little earlier and got like Ethereum at $400, but it's something that I slowly bought into. I was like, okay, let's try it this week. It's not like you have to buy a full coin. Bitcoin, if you break it down, you can buy Satoshis. Ethereum the same way. And other currencies are similar to that, right? It's easier to buy something like a Ethereum or Cardano, which I bought in with Cardano, like I think it was at $1, and I just bought a bunch because I was like, yeah, this is cool. Short term, I can get some gains. Let's see what happens. I might get out of Cardano soon, or ADA is what it's called by most. And there's other coins that you can invest in. They're stable coins. So we're going to do a part 2 when it comes to crypto, but I get it. Crypto is a very scary place for a lot of people because you don't really know what's going to happen. What is this digital currency? It's something completely new. And again, I was like, why not invest? If I'm going to spend $100 I go back to the steak dinner conversation I have with my cousin. I talked to him and he's been investing in crypto, little did I know, for years. And he told me, think about it this way. You're going to put in $100 to have a really nice steak dinner, right? That's something you might do on occasion, maybe maybe other week or so. You're going to go out and eat. What happens when you spend that money? What happens? It's gone. Poof, gone. Okay, if you put your money in crypto, it could be poof, gone. But what if you actually get a high reward from it? So you're putting in only the money that you can risk losing. So it's okay if you don't put a bunch of money in at a time. You can make small movements. Get to understand the space. Again, that's with the stock market as well. Even with dividend stocks. For me in 2017, I was kind of like, oh, I'm investing on whenever I got paid. So it wasn't even on a weekly basis. It was more of a bi-weekly basis. I'm putting in this amount. And then eventually, I think I automated, and it's still automated, where money just goes into my brokerage account. So that way, the money is there when I see the opportunity to buy. So that's how I look at it. That's my view. My cousin, he was super helpful because crypto was scary. And I was like, oh my gosh, like the money could just be poof. But again, there's so many things that we buy on a day-to-day basis, especially in certain countries, especially when you come to the Western world, especially when you're thinking about the US. But even people in other countries, there's a little trickle of money that you're probably going to waste. You're going to spend it on something silly. Like me, I could spend it on, oh, let me get like, I don't know, some random meal from this restaurant. Boom, $30 gone. Or I could say, no, I'm going to cook tonight. Let me put this $30 into crypto. Or let me put this $30 into buying a stock that I've been looking at for a while. That could pay me, my future self, Jessica, and Jessica will thank me later. Anyway, that's how I look at it. We got about 5 more minutes before I close this thing down. Let's see. It seems volatile. It is volatile, but that is also the beauty of it. The volatility is not 100% a bad thing because, yes, up and down movements, right? But what if you buy when it's going down, you hold it, and it goes up? And you can now sell at a high price. So it depends on how you look at it. Volatility is not always a bad thing. Like I talked about earlier, you can hit the replay, but I talked about growth stocks versus dividend stocks. Dividend companies that pay dividend stocks are typically not volatile. They're not a lot across the board. There's not a lot of excitement happening, but they're sending you that money on the monthly or quarterly or annual basis, right? However, with the growth stocks, there's volatility. There is volatility. However, that's why investors go heavy and get into a lot of growth stocks. Twitter, your Facebooks, your Teslas, right? Your Dropbox, your Snapchat, because they see the opportunity and the gains that can come with that. So high risk, high reward. Of course, you can kind of manage your risk and your reward, right? You can go for medium risk, medium reward, right? There's different things you can do. You can diversify. There's so many different aspects of this. Hey, Zero the Infinite, how are you? Welcome. Right. I bought in beforehand. I bought in, again, this one friend, he was just really insightful. He's got a really forward-thinking type of mind, which is just really, you guys know I'm all about that. But it's just, he's forward-thinking, he's innovative, he thinks what's going to happen, what's happening right now, what does this mean for the future, and tie that into the financial market. So he was talking about Pfizer before, like whenever the panorama happened, right before, like right when we were getting news, we weren't quite sure what was going to happen. It hadn't hit US yet, right? Well, I bought in and then it went up and I got out. So there you go. Just there's an EFT, exchange traded fund, that's indexed to a portfolio of REITs. It's ticker VN. Oh, Vanguard. I love Vanguard. Thank you, Shark. Okay, Sharky is giving some tips in here, guys. I'm gonna look into it. Vanguard Real Estate Index Fund. It only pays 2.5% dividend yield, but its growth has been excellent. Okay, so that's an interesting one. And I do like Vanguard ETFs. We might have to talk about ETFs soon because I do like ETFs as well. Let's see. Depends on the cryptocurrency. True. Thank you. Zero is saying, but cryptocurrency is going to be the future of money. Many people say that. Look, here's the thing. Why would you not want to be in that space if it's going to happen? If it happens, why would you not want to be there? I think of it as, I want to be there if it actually happens. Why not? I don't want to be the person that was like, okay, here we are in year 2030, and I'm looking back at, 2021 Jessica going, Jessica, why didn't you just put in $100? Like, why? There are different stories about people that got the tip about Berkshire Hathaway. This is a company owned by Warren Buffett. It is at a one stock price of about $400,000. At one point, it was $30,000, and this guy was saying like, oh, he got the tip, and he just doesn't have enough money to buy that. He's kicking himself today, still kicking himself because he could have done it. Again, we have to think more future-oriented, forward-thinking. about some of this stuff. And yes, it can be risky, but what are you going to gain if you don't take a little bit of risk? And there are smart ways to take risks. You can take on a little bit of risk as much as you can actually afford to comfortably. It's not like you have to put all your life savings into Bitcoin or Ethereum or Cardano. You just be in the markets, understand it, get to know it. And then as you learn more and more, you can, do more with your investments as well. So, and there are some people like Peter Schiff who's like, nope, it's a scam, not going to invest in that, but he's invested in gold. So most people are investing in something because they see the value of money. And this is a global thing. The United States, I was listening to a podcast this morning, Germany, the UK, the value of money has been going down, especially, looking at the Western world, it's been going down. So why would you keep your money just sitting in a bank when you know it's losing value? Again, watch my video where I talk about, are you working for assets or are you working for the valuable assets, right? Are you working for the money cash asset, which really isn't an asset, but we can say it for purposes of this video? Or are you actually working to gain assets, things that go up in value? Money is going down in value. And that's natural. Even before we were printing money like it's hot, right? Even beforehand, we had inflation at typically 2 to 3%, and now it's gotten even worse. We could have a deflationary period, who knows? But that's another reason a lot of people are trying to put their money somewhere where it can actually go up in value, because you're losing money if you're just keeping your money in cash. Apostle says true, but for now still new. People are trying to figure it out. Look, when you see these companies investing, here's my thing. This is not investment advice. I wanted to get in before institutions got into the space, because what happens when more and more institutions get into the space, what happens when the media is like, oh my gosh, everyone should buy Bitcoin. Right now it's kind of happening, but not quite. There's still media outlets saying it's bad, it's criminal, it's this and it's that. But once it gets to a place where all of the media companies are saying you need to buy this, it's going to be inflated in price, just like a Tesla, right? Just like a Netflix. People didn't know Netflix was valuable until the media said, hey, it's valuable. Guess how much this stock is worth? It's worth $600 per share. It tends to happen that way. Of course, we don't know. We can't tell the future, right? But that's typically how the trends work. And so now everybody wants to get into it, and the prices are more inflated. So now you can't get as much using whatever your currency is. And government's trying to adjust its tax-wise, legislation-wise, control-wise, and country-wise still a lot. We'll talk more about that in another video. If major banks back it, then people may gravitate to it. For now, it's innovator. We'll talk more about it. I know this isn't a crypto chat and I am over time. So let me just take a look at some comments and I'm going to close this thing out. Hey, Simplicity Digital, you're going to catch the replay. Yes, this was a good discussion. Cryptocurrency is taking the control away from the major banks, starting to decentralize the banks, but PayPal may end up being bigger than the major banks because they have their own bank. Interesting. Also, Square. Square was I don't know why I didn't talk about Square. Square was a huge gain for me. Little did I know how big that company was going to be. But it's great. It's the company that owns Cash App. Really, really big gains. I wish I had bought more stock than I did. I really do. I just did not realize. Again, this is why I say you have to kind of pay attention to what's happening right in front of you and just pause and think. That's the issue, is that a lot of us were working and have all these distractions in front of us, and we just need to sit down and look at what's happening, what's changing right in front of our eyes, and what can we do to be a part of it. We're going to see what happens with cryptocurrency, Apostle. We're going to see. But here's the thing. There's certain cryptocurrency you can literally buy for $5. Again, long-term thinking. 2025, 2030. I talk about artificial intelligence and other things happening right in front of our eyes. My concern is not for next year. My concern for people is what's going to happen in 2030 to certain jobs when it comes to automation, because I'm looking at the trends, I'm looking at what's happening right now. And it may sound weird when you watch those artificial intelligence videos I put out, but look, it's happening right in front of our eyes. You don't want it to happen, but it's happening, and we have to pay attention and take action. I see Bitcoin as a hedge against inflation. It could be, cryptocurrency. I've always imagined a world where we have one currency. That is an issue that many people have been wanting to solve. It costs a lot of money to transfer money from, say, the US to Japan. Bitcoin and other cryptocurrencies are solving these type of issues. So it again, value. What issue does it solve? What is money? What is money? Just ask yourself, what is a dollar? What intrinsic value does it have? And then take a look at something like Bitcoin, take a look at, something like gold or silver. And that may also clear up the whole conversation about cryptocurrency. Because when you hold a dollar, you don't need the dollar. You just want the dollar because of what it can actually buy you. You're buying something of value. You're not holding a dollar because it's valuable. Different from gold and silver. There's intrinsic value in gold and silver. This is a sterling silver chain. There's some intrinsic value of this because people want silver. People want gold, right? Not I'm trying to give you a finger, but people want gold. People want gemstones. People want these things, right? Intrinsic value. Look at the dollar and look at some of these other things. When at cryptocurrencies, they're solving issues. There's some value in that. All right. Simplistically Digital says Sharky knows his stuff. Yes, I love that Sharky's here to back me up. I love that. Thank you. Thank you, Sharky. I appreciate that. Let's see. Oh my goodness, the comments. I missed so many comments. You guys are letting me go over. Zero says people are scared of move things. People are still scared of cryptocurrency, but don't say the same things about stock. At one point in time, people were very cautious and afraid of the stock market. There are some people that are still afraid of the stock market because of the volatility. They don't know what's going to happen to their money. Because again, it's not that you're buying something hard, a hard asset like a golden ring, or you're not buying a house, a property. You are buying the representation, right, of a percentage of a company. So that ownership, you're technically an owner in a company, but you don't have anything necessarily, right? But it is valuable because of the fact that you have that ownership. The company is issuing that ownership to you, or a percentage of that ownership to you, right? Let's see. Zero says, especially with dollar losing value. Thank you. Thank you. We're not just holding the dollar just to hold it. Oh, it's pretty. I want that. No. Thank you. Yes, please hit that like button if you're enjoying this content. Hit the like button for me, please. Thank you, Sharky. So yes, you're not holding the dollar. People don't see like, oh, this valuable. People don't see, oh, I just want the yen because it's so pretty. I don't want, I don't want like what, rubles? What other currencies are euros? I don't just want the euro because I can do some things with this. What can you do with it other than go spend it and get something of value? What are some good assets? So I did talk about that in my working for money or working for assets video. Sharky, my friend, would you be able to drop the link to that if you would be able to find it? Working for assets versus liabilities, if you could drop the link. And also my cryptocurrency video, if you could drop the link to that, please, 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 so my computer does not freak out on me. But some good assets, I think I just mentioned a couple. Anything that you would see that value in, right? So what I have invested in, again, gold, silver, cryptocurrencies, stocks, mutual funds, plenty of things that are assets. Some people like real estate. It's like there's so many options, choose one. Some people like art. Jay-Z talks a lot of the time about artwork, right? And investing in art. There's so many that you can choose from. Just pick one and get started. I wish I had more knowledge on how to buy cryptocurrency a few years back. Then I would have come up already. So I really wish I knew and really understood the mining part of cryptocurrency. It takes up a lot of energy, it takes up time, it takes up, a lot to do that. But that's my next step, is to really learn about the mining aspect of cryptocurrency. All right. And then we talked about REITs. So going back to Swarthy's or Simplistically Digital's comment, REITs, real estate investment trust, if you don't want to just buy property, that is a really cool way. Watch the replay. I did talk about that, but that's a really nice asset to have depending on what your goals are. If your goal is to get passive income coming to you, dividend stocks, REITs would be my thought, right? Houses and land are some example of assets. Exactly. Yes. It can be for sure. For some people, it can be a liability. Kind of depends on what you do with it from that aspect. A car would be an example of a liability. Typically, people now are turning those into assets. So it can depend, but generally, car, liability. A house, depending on what kind of house you have, what you're planning on do with it, it can be an asset for you. Generally, in a few cases, it can be a liability, but mostly an asset. Typically goes up in value. Hello, Larry. Welcome in. It's nice to see you. Thanks for being here. You're planning to buy a house. Congrats, Simplistically Digital. Nice. That's amazing. Congrats to you. One world currency sounds like biblical prophecies. You're hitting on something. Daisy, you're already on the right track in investing in assets like stocks, especially dividend payers, and Jess was highlighting REITs for dividends as an alternative to buy physical property. Exactly. Okay, I think I hit on most of the comments. Hello, Natural Larisha. How are you? Nice to see you here. You snuck in on me. Hey, how are you? You're going to look into REITs. Definitely catch the replay. Simplistically Digital. I mentioned a couple of REITs during the conversation, including 2 that Warren Buffett actually has invested in himself. So you'll want to catch the replay and look out for that. You are welcome. And thank you. So Sharky has linked the crypto live stream below. So take a look at that one. Yes, passive income dividends. If you rent your car out for the day or drive Uber, exactly. And kind of what I'm hinting at is with Tesla, for example, the automated driving. What is the plan for people that own Tesla? Some of them, they want to have their car working for them, driving people around, and they take that money, right? And with Teslas, there's less cost of ownership, so they can turn it into an asset. Now, that's a real asset. Driving for Uber, you're still working, right? You're still working. So it's an asset for you because of your work, but you're still going to be, you might be at a wash because you have to pay for that car. You have to put maintenance on that car. You have to do a lot for your car, and you're working. You're using that car for work. Renting your car out, yes. And again, Tesla and their game plan of the robo driving, again, the stuff is coming. We're going to keep talking about it. So anyway, I'm over time, but I appreciate the discussion, appreciate all of the questions. If you have other questions as you're watching the replay, whoever's watching this video, definitely let me know in the comment section. I am going to continue having the Mondays or Money Talk Mondays. What am I saying? Money Talk Monday conversations. This is episode 4. So we're just moving right along here. I've had fun. This is a topic that I really enjoy, a topic that Shark FinTech really enjoys as well. And also he has just put the link for working for assets and not just money video as well. So I am actually going to put those in the about section after the video post and this live closes down. And that way you can also see them, but Simplicity Digital, definitely save those links so you're able to refer back to them. We're going to continue having some great money conversations because this is something I'm really passionate about. And I want all the people that watch my videos, I also want us to not only find careers and job opportunities and business opportunities that we're really passionate about and we're enjoying and we're liking and we're getting the income that we want. But I also want us to be able to invest in these assets that can help us in other ways, not just focusing on the job, right? Okay, my lovely people. Well, that is all I have for this night. And we're going to talk about some other conversations pretty soon. I will see you next week. And of course, I'll be posting up some videos this week. So keep an eye out for those. Thanks again. Have a lovely night. Peace, love, and hugs. And I will see you guys next time. Bye.